In this video, we will look at the three black crow pattern. This is a daily time frame chart of ACC. The three black crow pattern is the opposite of the three white soldier pattern. This is a bearish pattern, as you can understand from the name itself. So it's a three candle pattern. That's condition number one. Three candle pattern number two. Ideally, all the three candles should have tall real bodies. Okay, so every candle pattern has got an ideal version and a variation. Now, this three black crow is a variation, not an ideal version, because this candle or this in fact, this candle is not a tall red real body. Okay, so that's why I call it the variation of the three black crow pattern. Number three, every subsequent candle must open within the real body of the prior candle. So this candle is opening within the real body of the prior candle. This candle is opening within the real body of the prior candle. That's number three. Number four, ideally it should come after a basing period or after a uptrend. So it's a very dangerous pattern. When you see a three black crow pattern, there is more price downfall lying ahead. Point number five, I would not use this pattern to initiate a trade because of the poor reward to risk ratio. If you were to go short here, then your stop loss would be here. That's a very poor reward to risk ratio. Number six, ideally, the three red real bodies must open near their low, open near their high, and close near their low. In the three of these candles, that is not the case. That is why I call it the variation. So they should, just like this candle, it's opening near the high and closing near the low, right? That should be the case for a three black crow pattern. So as you can see, every candle pattern that I discuss has got nuances. If you don't know the nuances, you will incorrectly identify the pattern and make wrong conclusions about the market. So this is a variation. I wouldn't put much weight on this pattern, but even a variation of a three black crow pattern is very dangerous. As you can see here, there was more downfall ahead for the stock. So it's a very powerful pattern. I would not use this pattern to initiate a trade, as I told you, because of the poor reward to risk. But I would use this pattern to stay in the trade. So for example, if you were short on this stock, maybe here, or for some reason, if you are short on the stock and you see this three black crow pattern, people who do not have knowledge of the three black crow pattern might want to book their profits here or cover their short positions. But since you have knowledge of the three black crow pattern, you can see these three candles and say, wait, there is a three black crow pattern developing here, right? Since you have a three black crow pattern developing here, there is no reason to cover the position, no reason to close the short position, stay in the trade. Just that knowledge of being aware of the pattern can multiply your profits, right? So some patterns are used to take new positions, some patterns are used to manage existing positions, and management is more important than taking positions. Anybody can take a position, but how you manage it determines your profits. So you can go to this link. I have explained this three black crow pattern in great detail in my Japanese candlesticks trading mastery program. Check out that link, take the courses there. It will help you a lot.